Hi, my name's Elliott Prechter, and I'm the lead developer of EWAVES, the world's most advanced Elliott Wave analysis engine. Well, I'd like to just dive right into the live trading with you today because it's been a very volatile past few weeks, very exciting time, so I'm sure you guys are interested to see my thoughts. Let's get started by heading over to ElliottWave.com and looking at their Flash Services portal. Elliott Wave is a partner of Qualitative Analytics, and they have access to EWAVES, and they use it to help them with their recommendation service called Flash, which covers futures, ETFs, and stocks. So that's what I'm going to show you a little bit of today. Now, for those of you who watched my last video, you may notice that most of these are the same recommendations that we had then, except for the new position here on the S&P 500. That's because, sometimes we need to do a lot of work ourselves, and other times the market does the work for us. And when you have the right setups in place, you can kind of let some of these ride as the market moves, and it's certainly been to our benefit to do that this time. Now, I've calculated the percentage move of all of these recommendations relative to the direction that they're in since inception, so let's just go ahead and pull that up. As you can see, things have moved further since the last update that I did. So let's talk a little bit about these. Of course, this is an inverse to the S&P. That's relatively new. This is inverse to the NASDAQ right here. In fact, it's triply inverse to the NASDAQ. So that's why we've had such a large move in this particular symbol. We're also long Treasury bonds, and those have been spiking lately as a lot of fears grip the markets, and the Fed has been talking about lowering rates. But of course, we knew this well in advance because we used the Elliott Wave principle to determine that we had 5 waves down in TLT a while back, several months ago, and we're due for a large rally. We're also inverse China. We've got a minor position here on the euro. These, of course, are tech stocks that are highly correlated with the NASDAQ 100. And then some smaller positions here. HSY is kind of notable, first of all, because it's a chocolate company, Hershey's chocolate, which is always delicious. But also, it's actually moved inversely to the market. We've seen a big decline, and this was actually a long recommendation that has continued to climb higher in spite of the recent sell-off. And then finally, this symbol BEPC we talked about last week, which involved that really cool flat setup. And if you don't remember it from last week, then I highly recommend you take a look at the last video. Here's what that setup looked like. I took a screenshot of it, just highlighting this secret of flat corrections and the fact that they actually do form parallel channels just a little differently from the way zigzags do, but it can help you pinpoint the exact turning point when that corrective move is going to end. So very cool, and you should go back and watch that video if you haven't. So with that, I'm going to close out. Now, although there are quite a lot of recommendations out at the moment, there are really 2 in particular that I wanted to focus on because they have macroeconomic importance, and those are the TECS and TLT on here. And basically, TECS is a triply short fund. So this is inverse to the technology sector, probably inverse to a lot of the same things in the NASDAQ 100. And the TLT is long-term U.S. Treasury bonds. Okay, let's click on the TLT here and pop that open so you can see the wave count. Now, before we discuss the details of the wave count, the first thing I want you to notice is just the date on this. This is copyright June 3rd, 2024. The last date of update was June 3rd, 2024. That's because this was the setup that we used to actually put this recommendation on. The setup is certainly the most important thing, so that's the chart that you want to really focus on. Now, in terms of actually updating this wave count day to day, if you want that, that is not available through Flash. That is exclusively available through the full eWaves live service, which looks like this. And we've got all the markets here you can select. We could type in here to go searching for TLT or browse markets. And use the wave finder here to find setups like the one we have in TLT that I'm about to show you. But in order to get this, you have to go to ewaves.com and you can read more about it here. Now, TLT has a really cool story here. First of all, this nadir here back in October 2023, that nadir formed after TLT had been moving down for 3 years, since March 2020. So actually, just a massive decline here into this low. Now, I don't think anyone else is aware of the fact that it has turned bullish since then, because as of this recent low here and this low here, the psychological backdrop of this market is just as negative as it was back then. So if you look at market psychology in terms of sentiment, or if you look at the commitment of traders, you'll see that that's the case. Of course, we knew that in spite of all the negativity, that actually this was a great time to get involved in TLT. And I want to show you why. So first of all, we have a very common setup, which is that we've been using with Flash, which is 5 waves up, 1, 2, 3, 4, 5, and then a counter trend move, A, B, C, and then just enough of a move here to break above this trend line here that's formed by the beginning of this zigzag pattern that ends here and the end of its B wave. This is sometimes called the baseline. There's kind of an imaginary line here, and we had broken above that line here. We moved back below it and then broken back above it again. So we're really showing some strength here, and that's what gave me some extra confidence that, okay, this corrective move is done, and we're about to have another impulse move to the upside, just like we had out of this low here. Now, one thing that gave us some extra confidence that this decline was corrective, okay, was the triangle here. And this is a wonderful, like, just really cool thing about triangles is that because triangles can only occur in the B, X, and 4 positions, it cannot occur in 2. It gives you this extra clue because we had, look, 5 down here, then we had a triangle, A, B, C, D, E, and then another 5 down. Now, we could have said, okay, this is 1, 2, and then the beginning of a third wave down, right, to those new lows like all the traders were probably expecting. But the reason that couldn't be valid, according to the grammar of the Elliott Wave principle, is that wave 2 cannot be a triangle. So this can only be a B wave. It can't be a 4 because there's no impulsive decline coming down from here that could turn this or allow this to be a 4. So really B was the only game in town. Okay, very high likelihood that this is a zigzag. Really quite a slam dunk zigzag because of that triangle. So triangle Bs are a wonderful secret when it comes to helping you identify things that are corrective with a very high likelihood. So that's really all I want to talk about with TLT. Just fascinating. And of course, it's always fun to see a market that's been declining for so long to reverse and just spike upwards, and to be involved in that when nobody else is looking at this market, and to do that purely through using Elliott Wave patterns generated by our eWaves software. So let's go ahead and close that up now. Now it's Pop TSS open here, and you're going to see something that I normally don't share in these kind of free videos. It's normally for people who are subscribers. They get these ultra long-term wave counts. But this one, which we put out, this setup really goes back all the way to 2009. And that's the interesting thing about setups, is that the way eWaves works is it's scale invariant. So some setups are short-term and others are very, very long-term, like this one in the Direxion Tech Bear 3X shares. Okay, so this is inverse to the NASDAQ. And as you know, the NASDAQ has gone very elevated since 2009. This bear fund has been falling and falling and falling for a decade and a half. And yet eWaves was able to pinpoint 5 waves down, 1, 2, 3, 4, 5, as of July 10th, 2024. Okay, so on that July 10th is when it said, okay, this decline is done, and it was time to look to actually go long this market for possibly an extended period. So if you've been following the markets, today, of course, is August 3rd, but if you've been following them for the past few days, the markets have been declining quite a bit. So far, this is looking good. So although the Wall Street adage is never catch a falling knife, with Elliott Wave theory powered by the eWaves analytical engine, that's exactly what we're doing here. We're picked almost, I believe actually this is the exact top of that market, July 10th, 2024. And we pinpointed that. And actually, contrary to that catch a falling knife philosophy, the risk here, although it is a triple fund, is actually not that huge because the stop is so close, because we were able to pinpoint it. You know, now the market's moved so much, and as I showed you earlier, this has already moved 40% in this direction. You know, if you were to jump in late like now and the market reverses higher and this triple X fund goes lower, you know, that's a 40% risk. Whereas at this peak, there was very, very little risk, just a tiny percent. Yet the potential here is just massive, given that it's already moved 40% in just a few days. I mean, with just these relatively modest declines in the NASDAQ we've had. I mean, if we get real declines, then this would become quite significant. So although there's a lot of other markets here we could talk about, I think I'm going to wrap it up for today just because each market is so interesting and has such a long story. I could talk about each one of these for an extended period of time, but I think I'm going to leave it at that. And again, although Flash is run by a human and uses human discretion, the analytical engine that the person driving Flash has access to is eWaves Live. And again, this is what the portal looks like for that. So just go to ewaves.com if you want to check it out and learn more. So with that, I'll update you guys again, hopefully not too much longer. And I hope the markets continue to stay interesting. I think it's been a fascinating few weeks, and I really love it when things reverse, when a lot of people are on the wrong side of the market. I don't know why that's interesting to me when you have a very clear analytical picture of what's happening, but other people don't because they don't use these tools. They don't know Elliott Waves. They don't know fractal analysis or how that works. They don't understand market psychology. And so you look at right now, like on the TLT I was showing you, hedge funds are massively short treasuries and treasury bonds. They think rates are going to keep going higher due to inflation, but the wave count tells a different story. And of course, hedge funds are massively long tech shares. And that's been going on, as I showed you, for a decade and a half. But our engine is saying that, okay, the winds are shifting there. So it's going to be a very fascinating, massive unwinding now that I think we're witnessing. But what's nice for me is just by using eWaves and looking at the analysis there, it takes a lot of the guesswork out of it because I know that I can rely on this model. So with that, I'll talk to you guys again soon.